Marianne, welcome. And why don't we kick it off with Qorvo?
Well, thanks, Tyler. To start with Qorvo, it's in that semiconductor category where estimates have been cut pretty dramatically in recent weeks, and the stock's been downgraded around concerns for those semiconductor shipments. Also, Qorvo generates about 25% of its earnings from, or sales, that is, from China. And that has just been so sporadic with their economic reopenings, without vaccines, without treatments. So the shares are trading very low, 8 times forward earnings, and that's a very low end of the semiconductor sector. But the stock price has been dropping for a long, long time, and there's supply chain headwinds, there's cautious guidance from management. They're likely losing market share. So we would sell this name as we don't think it's reached its bottom yet. Wow. All right. So what about for Skyworks then, Marianne? Well, Skyworks is a radio frequency chip producer. I don't know how many people realize this, but 60% of their sales, at 60% of their sales, are to Apple. So it's highly dependent upon that one company and all their new products, their latest iterations. We've heard strong things about their latest product in terms of acceptance. And we noticed that they are gaining share in Android phones as well, both in the high end and the mid-tier side of Android. So that reduces the dependence upon Apple, which has always kept their multiple toward the low end of the sector, PEs. So management has pledged to buy back 2% of its shares. They offer 2.3% dividend yield. This is a company we think is going to surprise to the upside, and on both revenues and earnings when it reports on the 28th. And it's trading at about a 45% discount to the S&P 500. So that's a buy for us.
That's a buy for you. All right, let's move on to Estee Lauder. Is this one a beauty? And I don't mean to be too harsh, or lipstick on a pig?
No, I think the PE ratio is a beauty. It's about twice that of the S&P 500. That's really been keeping us away from this name, and we have not been adding to the staples sector. It's just a company that should be benefiting from the reopening of the economy over in China. Think about travel, think about duty-free. That's a big part of their business, and it's a very profitable part of their business, especially in China, with the emphasis on more lotions and potions, shall we call it, rather than the lipstick type of things, the color side of it, I mean. But, you know, even though we talk about strong travel in the U.S. and into Europe, we really need China to work for them. And so I think the earnings estimate, which you could drive a truck through, I mean, it's between 20 cents and 58 cents for the current quarter. You know, the midpoint could be beat, but I don't think management is going to have great things to say about their supply side and also their sales on the travel and duty-free
And as
side.
you say, its PE is high, so this is still an expensive stock, even though the PE has fallen.
Yeah, it's a beaut.
All right, thanks. Appreciate it, Marianne. Marianne Montaigne. For more potential names that could surprise to the upside, why don't you head to cnbc.com/pro.
Shepard Smith here. Thanks for watching CNBC on YouTube.